Good morning, everyone, and welcome to the Ankerstar Wealth Market Update. I'm your host, Allison Ankerstar, and today we'll be talking about the worst start to the stock market in 50 years, the chances of a second half recovery, and the current chaos in air travel. But before we begin, as a reminder, this financial education presentation should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Good morning, Steve. The stock market just had its worst start since 1970, over 50 years ago. What should people do about this?
Hey, good morning, everybody, and thanks for that intro, Allison. And as you can see, still on the road. This is the last show we'll have on the road as we get home for the big weekend. And if you've been following along with the volleyball nationals, we finished up yesterday, strong finish for 21st place in the nation overall. So we came in, as you know, the 24th seed, finished 21st. We'll take that. All in all, a good, successful season for the girls, and looking forward to next season, which starts, a week from today, that sort of thing for tryouts. But back to Allison's question, the worst start in 52 years is the actual number since 1970. And, as a family or, kids being kids, of course, they ask like, Mom, Dad, were you even alive back in 1970? I was like, well, I was, your mom wasn't. But yeah, I mean, literally my entire lifetime, if you will, since this happened. So that's the magnitude of the move down in the market. So what caused it? Obviously, inflation. We do have a war raging over in Europe. Does that affect us? Well, yes and no, right? If certainly we're not sending troops, but we are spending resources and time and effort to support the cause over there. But it does weigh on the world economy. So that's one piece. The war raging. I thought it would last week. I was wrong. It is still going. And there's really no real end in sight other than it will end. We just don't know when. But that'll be another, that took the market down in the first half, and that would be another catalyst for things changing. Obviously, inflation was the big news. Inflation was the disease, if you will, that we knew we were going to have to deal with going into 2022. You could argue the politics on what caused it, but the cure then was the Fed raising interest rates. So the combination of a war going on, inflation, Fed raising rates, the bond buyback program, there's several things going on that are literally not related to the companies we invest in that are knocking these companies down 20+% across the board. And then, of course, the tech firms have been hit even harder, down 30, 40, some tech firms that were a little bit riskier, down 70, 80%. I mean, huge losses, right? So that was what was baked into all this, and the negativity baked in very quickly. So when you think of, the world is ending, well, the world is not ending. It's just we're having to deal with a lot of problems, and markets don't like uncertainty. So therefore the market sells off. So when you take a look at this, yep, S&P down 21%, for the start of the year, just all kinds of negative things. Now you see Kramer explaining why investors should buy stocks. So what's my take, or what did you ask there for, what should investors do? Well, there's the chart of the first half, right? And again, this is the S&P, NASDAQ's a little bit worse. When you look at its 20+% move down, we did have a couple of head fakes that we thought maybe this would be over. We just had one, then it started selling off this week, really, going into the end of the quarter. So like I've told everybody else that invests with me, do your own due diligence. But if I think this is the bathtub, I don't know where the exact bottom is. Nobody does. However, I do think all the negativity is baked in. So I don't see the market going much lower from here. So do you buy now? Do you wait and buy? That's more up to your risk tolerance. If you're, no problem with just acquiring stocks over time, you can buy now. If the worst thing in the world would be for you to add another $5,000 to your account and watch the market go down the next day by 3% because it's been moving these huge moves, then don't do it. Just wait. The problem is when the recovery happens, it tends to happen very quickly. And then it's tough to time that re-entry. So a lot of people don't bother, like me. I just try to buy when stocks are cheap, keep adding to the portfolio. I know it'll recover. The market's undefeated over history. So it's coming back. You just don't know when. So Allison, that's how I would say to everybody is yes, historic beginning of the year. I got a message yesterday, it's a great time to be alive. Well, in your kind of a snarky comment, but in an investing lifetime, you will see this, right? And honestly, in the bigger picture, it's no big deal. At the moment, it's a huge deal. right? Right now, it's a huge deal. Or if you're looking to retire in the next, 6 to 18 months, it's a huge deal. And there's a lot of financial planning that needs to be done if you're going to do that. But anybody else has got a little bit longer timeline. This is a storm rolling through paradise, and it too shall pass.
Next, in the second half of 1970, the stock market was up significantly. Any chance of this happening again?
Well, this is what's amazing. So we are at a historic moment. 52 years ago, in 1970, the market sold off 21%. At the end of 1970, and listen to this carefully, at the end of 1970 was an up year. It was an up year. You're like, are you kidding? That was, 21% down in the first 6 months and the market ended up. Yes, kids, it did. Look at the, the history of the tape here. History offers hope, if you will. Right here, this note plunged 21% in the first half of 1970 and promptly reversed those losses to gain 26.5% in the second half and eke out a gain for the year. Isn't that insane? Well, think about it. When markets go down, stocks get cheaper. Much like when you hear hey, fire sale going on at Walmart or Home Depot or wherever you shop, people tend to come off the sidelines and go buy stuff. For those that have the long-term perspective and really understanding that you're buying pieces of companies, you will understand that stocks are on sale right now. You will understand that now is the time to actually rush to the store, i.e. the stock market, log in, maybe not look at your balances because that might get you depressed, but certainly look at the current prices of, Apple stock, Amazon stock, these companies that are really, these huge, awesome companies that are on sale right now. So, don't sleep through that. When you look back, and if the market does recover, we do have the elections coming up. I think that could be a catalyst for things to go higher. Inflation doesn't have to go to zero for the market to go higher. It just has to kind of break and show that we're past peak inflation. The Fed doesn't have to stop raising rates. They just have to ease up on raising rates. And then the war in the Russia-Ukraine conflict, if it ends, that's another catalyst. There's always things of potential catalysts for the market to go higher. You get one of those to happen, the market creeps higher. You get 2 or 3 of those happening at one time, market screams back higher, and people will look back and go, how is that even possible? Well, look at your history books, kids. It happened in 1970. 21% minus in the first half, 26.5% positive. So don't give up hope. Don't give up on your future. Don't give up on investing just because we've had 6 months of basically continuous punches to the face. It's no fun, but this too shall pass.
Last, air travel cancellations have caused chaos throughout the U.S. in the past week or so with no end in sight. Will this affect the stock market?
Well, indirectly, yes. When you think of, first of all, from an individual perspective, when your flight gets canceled, that causes drama to you, right? You have to either not go on the trip, you have to come up with a backup plan. Now rent a car and drive versus flying, highly inconvenient, and not even that much cheaper anymore. Have you rented a car lately? That's insane. It almost makes the airlines look cheap, right? So that affects us as individuals, which affects the amount of money that we spend if we're going on vacations and stuff to spend money to keep the economy going. So that's the individual side. On the business side, yeah, there are plenty of people that travel to go face to face because there's still a ton of value if you're working a mega deal, which could be at all different levels depending on who you are. But if it's a big deal to you, to where you're going to hop on an airplane and look that person in the eye and maybe stick a hand out and shake hands on a deal, that whole system could get disrupted, right? Or too expensive for you to go, that sort of thing. So it does affect business. It does affect the economy. It's more of it happens and it doesn't really affect for a little while though. And we'll see how long this continues. But what is causing it? We're talking, well, first of all, let's talk about this chart because this is kind of funny. This is CNN. I don't use CNN much for a source. I like CNBC, obviously. But here the question becomes is like, okay, Steve, I haven't traveled in a while, but I'm about to. And what are the airlines that are canceling the most? Well, here are your Allegiant, Frontier, JetBlue, Spirit. Those are your discount airlines, if you will. No offense to them. It's just a fact. Republic, they're canceling the most. So that really kind of shouldn't shock anybody because they don't have huge fleets. They don't have huge workforce people to be able to deal with changes, right? So, and then you kind of have the major starting with Delta and Southwest. So, I've got a Southwest flight tomorrow to get back home. hoping all that stays stays on so we can get back home, right? Otherwise, guess what, kids, hop in the car. We were driving old school style back home. But we're going to get there either way, right? But what I want you to take a look at this chart, when you say, okay, Allegiant, 14.7% cancellations, Frontier 10%, JetBlue 10%. Okay, when you look at that, you're like, that doesn't seem that bad. But then when you really look at the title of the chart, so go back to like school, read the chart, see what it's telling you. This is compared to this is above the normal average. The total cancellation, this is not a total cancellations chart. This is above the normal cancellations chart. So that gets in if normally they cancel 5% of their flights or 3 or whatever the number actually is, this is above and beyond the normal rate. So kind of crazy for what's going on. So I do, I feel for folks that are out there that have these plans made, and now they change. And of course, if you thanks if you get if you get travel credit for the $300 ticket you bought 6 months ago, well, you try to buy that same ticket today and it's like $800, right? So it's like finding another airline is an option for some folks. And then, it's just miserable across the board. So overall, will it affect the market? I don't think it's a major needle mover, but it's just it's another thing that's going to continue to kind of drag on the economy moving forward. And hopefully the airline chaos doesn't last that long, like through the summer or anything. Hopefully it wraps up soon.
Thank you, everyone, for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices@ankerstarwealth.com. And don't forget to like and subscribe to get daily updates. That's all we have for today's show. I'm Allison Ankerstar, and we'll see you back here tomorrow.